two, we'll go ahead and get things going. We want to thank you all for joining us this evening here for our first webinar of 2024. For those who don't know, we are Island Federal Credit Union, proudly formed right here on Long Island in 1955, and been serving individuals and small business banking needs ever since here. Currently serving over 50,000 individuals, families, and small business, and are proud to be a member-owned, community-focused credit union. It's been a very interesting year the past couple of years, with Fed rates going up and down and saving rates, and a lot of conversation about what's going to happen next with credit cards and CD rates. So our goal today is just to give a quick overview of some things you can arm yourselves with as far as best financial habits possible, introduce ourselves here as advocates and allies for you as well, and answer any questions you have. So you may see at the bottom, there is a Q&A section down there where you can type in questions. If possible, try to hold your questions till the end. We will allocate some time for those questions there. As an important reminder, please do not include any personal or sensitive information in those questions. No social security numbers, blood types, pet's first name, grandma's first name, none of that at all. Our team will give you the contact information at the end of this. If you want to set up a one-on-one consultation to dive into your specific situation, we'd be more than happy to do so. With that, we've got two great panelists here to talk about some of our financial needs. We've got John McGregor, our Senior Vice President for Business and Community Development, and Catherine Roger, our Assistant Vice President for Retail Operations. Between them, several decades of experience working in banking and credit unions, and have helped tens of thousands of people improve their financial situation. And we're very happy to have them joining us here. So without further delay, John, please take it away.
Good evening, everybody. Thank you very much for joining us tonight. We're excited to be able to share some knowledge on behalf of myself and Catherine that we have learned over the years, and how we can help you better arm yourself, as Chris said. We're looking for you to be able to improve your financial health in 2024, and that's a big role for us at Island Federal Credit Union. So I think some of the things that they're gonna speak about tonight are understanding the roles between banks and credit unions, be able to become more knowledgeable about credit and your credit, set your financial goals, and achieve financial wellness. So the roles of banks and credit unions in our country it's very important, because it fuels our economy. So where a bank is a for-profit institution, as Chris mentioned before, a credit union is a non-for-profit financial cooperative that looks to help itself based upon the needs of its members. There's a role for each. There's a role for banks in our economy, and there's a role for credit unions in the economy. It helps with the exchange of cash, from your debit cards, credit cards, Venmo, and paying your bills. So it is a very important function. With credit, everybody has different credit needs and has different experiences with credit. So we want you to also become more knowledgeable on your credit, maybe ways that you can look to help improve your credit by setting financial goals. One of the things that's different with us at Island Federal Credit Union, Catherine and I are certified credit union financial counselors, which does mean that we have taken courses and passed tests to know that we can provide up-to-date current information to help you with credit, budgeting, and things of that nature. And our service is totally free. Whether you're a member or you're not a member of Island, we'd love to be able to help you. We'd love to be able to sit down with you. We don't get paid to, give you any financial or credit advice. We just look to help you and your family at Island Federal build a financial future that will benefit yourself. So the role of a financial institution is a safe place to put money. As everybody knows, it's where your paycheck usually goes, whether it's in a financial institution, a cash app, anything like that. But the financial institution helps you be able to do investments, lend you money for things that you might have coming up in your life, easy exchange between parties, whether it's Zelle, just using your debit card, making purchases with a credit card. And we're also here at the credit union to give you expert advice about your finances and what can benefit you. So there are many reasons that banks and credit unions are different. Credit unions are non-for-profit, which means that we are owned by our members. We do not call you customers. We call you a member. Being a member, we look to derive profit back to you as the member, not to a stockholder like a bank does. And we look to give you back our profits based in higher rates on certificates of deposits, better rates on lending, giving you the best technical advantage we can with all our technology. We usually have less to no fees, where banks normally have higher fees or have minimums that you have to maintain in order to get free checking. Like with Island, our cashback rewards checking is no minimum fees. As I said before, we look to give you lower rates on loans instead of the bank, which is trying to look to get those profits for the stockholders. We're insured pretty much the same way. Our insured regulatory body is the NCUA, the National Credit Union Association, and a bank is FDIC, which is the Federal Deposit Insurance Corporation. They pretty much do the same thing. They're in Washington. They're probably like across the hall from each other, and they help to protect your money. The credit union is owned by you, the member. Our members are people that can be on our board. Our board of directors are non-paid volunteers that help to guide the credit union to the best things that we can do. Where the banks are stockholder owns, decisions are made by stockholders and people that are looking to get money in returns. We have different ways that you can access your funds. We don't have a branch on every corner. We don't have to have a branch on every corner. We do have a network of courtesy banking centers, over 5,300 across the country, that you can do deposits, withdrawals, loan payments, just as if you're standing in Island. We also look to give you more access to your money for free through ATMs. We have one of the largest surcharge-free ATM networks across the country, with over 115,000 surcharge-free ATMs across the country, and specifically 900 surcharge-free on Long Island. So the difference is you can get your money out and not get paid that $3, $5 fee, which can also affect your budget. We don't play games at Island, so you take out $20. It's not like we're going to charge you $23 and then say at the end of the month, oh, we'll give you back that rebate for your ATM fee. You take out $20 if you go to one of our network ATMs through the Oil Point network, and it's just $20 out of your account. We are local, as Chris stated before. We have been around since 1955. We started for local employees right across from our Hicksville branch, if you're familiar, on 85 East Old Country Road in Hicksville. So what we look to do is we really look to be involved in community and community events, and really give back to the communities. We live here, we work here. You have an issue, you're calling, you know where you're calling. You're calling on Long Island. You're calling one of our branches. You're calling our contact center. Where a bank has, you have to go into their bank to do a deposit or withdrawal. If you don't use their ATMs, you're going to get charged fees. And they're more national and regional based, where we're more home focused of where we are. We are headquartered in Hauppauge. We have 11 locations spanning from Riverhead to Brooklyn. Catherine is going to go over this slide.
Yes. So as John was saying, we are in your communities, and this is what makes up a credit union. We are unique because we are born out of your communities. So we resemble Long Islanders. We are there making decisions with you. We know what you are facing in your life. If you have any difficulties, we know the struggles on Long Island, the financial struggles that you're facing. So we can talk to you about those knowledgeably. You are not a number to us. When we look at the relationship with you, we're looking at more than a credit score. You know that you're going to get the best rates and the lowest fees, if not any fees, most times. Our service is top notch. You're not going to find better service. Again, because we're local, we're in our communities, we are participating in chambers, we're in your local businesses. We are there and we are willing to help you. It's convenient. You can come in and see us anytime. As John mentioned, both of us are certified to help with things like credit and budgeting. And we have met with many people, John and I, and both of us are proud to say that we have helped many people, individuals that we've sat with, that we have gone over budgets with and credit with, and helped them to make decisions and made suggestions for them to improve their financial health. And again, I mentioned the community involvement. We're out there, we're in your communities, and that's the difference. We really care what's happening here on Long Island, in Brooklyn, in Nassau County, Suffolk County. We're there.
So one of the things as we talk about budgeting is the 50-30-20 rule of budgeting. So we know everybody has high bills. You know, prices are starting to a little bit to come down on gas, on some food. But with your budgeting, no matter what the prices are, you really should try to incorporate this into your life. So 50% of the money that you have coming in should go to needs. You know, your rent, food, electric, car payments, anything that you need. Now, with that being said, we also want you to pay yourself. So 20% should go into emergency savings, whether you're thinking about retirement, an IRA, something through our Island Financial Services, to help you save for the future, because you're not always going to have the same income when you retire that you have today. But then we also don't want you not to have any fun. So 30% should be for wants. So, you know, you want to go on a vacation with you, your friends, your family. You know, you want to get tickets to that, you know, that concert that you want to go see. Maybe you want the latest, greatest technical device that's out there. So we're not saying that you have to budget and not get things that you also want, because we know everybody works very hard, but we also feel that you have to keep it to a certain minimum. So 30% is normally a good rule with the 50-30-20 rule of budgeting.
So that 20% that's going to savings, part of that is going to be for an emergency fund. So what is an emergency fund? So this is cash that you're going to put away in usually a liquid savings account so you can get to it when you need it. You're going to put this away for things like, you know, if your car breaks down, if your heating system in your house goes or your AC goes, if you get sick, God forbid you lose your job. This is going to be 3 to 6 months of living expenses. So this is 3 to 6 months of what it takes to pay your bills and run your household and make sure that everything that you need, you can get. You're going to keep this separate from other savings so that you don't mix it up, because what you want to do is make sure that you're not using this for any wants, right? So needs versus wants. This money should be for things that you need, not things that you would like those Coachella tickets that John mentioned earlier. This should be for things like food and gas and you know, things like that if you were to lose your income stream. This account you don't really want to look at every day. Like I said, you want to keep it separate. You want to keep it liquid. It does take commitment to build this type of fund. But if you plug away at it slowly, you can really build a nice nest egg so that you can live more comfortably without anxiety, knowing that you're covered, God forbid anything happens. And credit cards. So we're going to get into a little bit of information about credit cards, how they work. I think everybody pretty much has a good idea of how credit cards work. You apply for a card, they give you a line of credit, you make purchases against that line of credit. You can pay it off over time, or you can pay it up in one lump sum. Unfortunately, a lot of people are not paying them up. They just keep building them and stacking them. And what happens is that unpaid balance grows and it accumulates interest. And this is going to make your payments higher, and it's not going to give you any savings. So I know a lot of people do like store credit cards so that they can get savings on specials if you use the store credit card. But you're not really saving anything if you're not paying off that balance monthly. Those savings are going to be eaten up by interest. So you really have to think about what you're doing when you're using a card. Um, and the comparison to credit card versus debit card, credit cards, you're borrowing money. You might be able to earn rewards. You're going to build credit depending on how you use that card. That's really important. And we'll talk a little bit more about that later. And you could owe interest, again, if you're not paying those balances off. With a debit card, you're spending your own money that's in your account. Now, this says that there's no rewards, but at Island, we do give rewards. And the nice thing is that you can not only earn rewards on your debit card, but you also earn them on your credit card. And that's with no fee. A lot of credit cards have an annual fee if they're giving you reward points. Our card doesn't, and you can combine those rewards. With a debit card, you don't build credit, but you're also not paying any interest. So you have to weigh your options on how you use both of these, and they really have to fit into your financial plan and what makes sense for you.
So as we spoke about, Catherine spoke a little bit about credit. In 1956, Bill and Earl met, and they created FICO, which is one of the leading factors of your credit score. So what goes into your credit score? It's a whole mix of things that go into your credit score. As you can see, 10% is new credit, 15% would be your length of credit history, 10% is the mix of credit. And by that, we mean whether it's a credit card, an auto loan, a mortgage, maybe a personal loan. 35% is your payment history, and 30% is the amount that you owe out on that credit. As Catherine discussed previously, if you owe money on the credit cards, one of the things with your credit is that the credit bureaus like to see you have 30% or less of your line of credit unused. So like if you have $1,000 credit line, to keep your credit really good, they like you to be like $300 or less. Your payment history, as you can see, is 35%, is a major impact on your credit score as well. So these are all things that you need to keep in mind because it affects everything you do. So credit will affect how much you pay for auto insurance. They'll do a soft credit hit. If you're renting an apartment, they're going to maybe do a soft credit hit to see if you pay your bills because they don't want somebody to move in that is not going to pay their bills and has bad credit. Do you have too much credit out? You want to make sure that you don't overextend yourself or keep applying for credit. Catherine said previously on the previous slide, you might take advantage of something with a store card and they'll say, oh, well, it's 12 months interest free. Okay, but if you don't pay it off in that 12 months, all the interest has been accumulating. And on the first day after your 12-month period, you're going to pay all that interest that's going to go onto your credit card. So that's one of the big things we see when you budget. And we're not saying that credit is bad or using of credit cards is bad, but we're saying to use it responsibly. There's always going to be a time that you need to use it, whether you have an unexpected auto repair, maybe the furnace goes out at your house, something happens. So we're not saying that credit is bad. We're just saying that you really have to keep an eye on all the different type of credit that you have and how you pay it back and how much you'll accumulate in credit. So Bill and Earl, have got a nice credit scoring system, and it goes from 300 to 850. It's based on all these different caveats, and you'll see, like based upon the credit score range, how you would best qualify for best interest rates. Obviously, if you have a very high credit score, you're going to get the best rates possible. If it's a little less, you might not get as good of a rate. If you're average and they see some hiccups on your credit, they might require, like if you're going to go for a car loan, that you get a co-signer or a co-applicant, maybe somebody who, they know has a better credit history and they know that, if you don't pay it, that they'll end up paying, your loan back. Some of the things that you have to be careful of is you get things in the mail and it'll say you'll be pre-approved. Well, with all the credit bureaus, lenders can do soft hits, which you will never see. to see maybe if you qualify for a credit card or you don't qualify for a credit card. And just because they say, oh, you get something in the mail that says, oh, listen, I'm going to be pre-approved for $5,000. When they actually get all your information and your income and all the different caveats of credit, you might not be approved for that. So you really want to be very careful of what you do with your credit. People are looking at credit all the time. It's great. We feel it's great, Catherine and I, that everybody can get their credit scores now. At Island, we have Credit Sense, which is an outstanding tool that lets you know when your credit score is going up and down, if a new credit went on it, if you just got a new credit card, if you paid something down, you can refresh the score every 24 hours. It does not impact your credit score, but it gives you a great overview of how you've been using your credit and what you have out on your credit, and you can make sure that everything's correct. If something is not correct on your credit, there's a whole different avenue that you have to go through to try to dispute it, to get the right information, off and on your credit report. So impact of your credit scores, we said based upon your credit score, we have a scenario of an auto loan, $28,000. You get a great rate. I wish the rates were that low right now, 2.59 over 5 years. You'd pay a little over $498 a month. In 5 years, that loan will have cost you just under $1,900 a month. Now, let's say your credit score wasn't as good as that. So you're not going to get that 2.59 rate. You might get like a 7.59 rate. So instead of a $498 payment, you're $562. So that's more money out of your budget, out of your pocket to spend and to save. And instead of only paying like under $1,900 over the 5 years, you're going to pay over $5,700, and it's going to end up costing you over the 5 years just under $3,900 more because your credit might have taken a hit. You may not be looking at your credit, and this all goes into budgeting. When you have to make that monthly payment every month, you have to, make sure that you can afford a new car. Do you want a new car? Do you want to buy a used car? Can I afford that TV, going to that electronic retailer and getting, the TV? Are you able to afford that within your budget?
Some of the things that go into credit decisions are listed right here. These 5 C's, they are definitely important when making decisions about approving your credit application or not. Character, they're going to be looking at your credit history. Are you making your payments on time? Are you maxing out any credits? Do you have too many open accounts? The capacity, how much you have coming in versus how much you have going out. Can you comfortably afford this new payment every month? Collateral, that would be the car that you're purchasing. We put a lien on the car. Capital, so this would be your own investment. How much are you putting down? Are you putting down money on the car that you're buying? When you're buying a house, what your down payment is on your house, or other security that you could be offering. Conditions. So this one includes factors like purpose of the loan and interest rate. So like, does this loan make sense? Is this loan gonna help you accomplish what you're looking to accomplish? Does it make sense for this loan? Or maybe there should be a different product that we're looking at, or a different way of accomplishing what you're trying to do that would make more sense. We at Island take all of these things into consideration when we are decisioning a loan for you. We are not just, as I mentioned before, looking at a credit score. We can talk to you about each and every one of these things that will factor into a loan decision for you. John mentioned, just showed you a slide that shows you saving money depending on your credit. Well, we have also refinanced loans for many of our members that got credit elsewhere, saving them money every month just because we were able to lower that interest rate for them as well. So again, when we have the conversation with you about a loan application, it's much more than just a credit score. We're going to look at all of the variables, your relationship with us, and how long you've been at your current employer, for instance. So again, you're coming into a local community financial institution that's there to help you.
We basically, want to be your trusted financial advisor, like Catherine said. It's very important. This is our skill. This is our skill set. You might not know all the lending products and services that we can offer you. Your friends or family might know one area, but not know another area. So it's very important to come in and have a conversation with us. Like Catherine said, we are not getting paid to put you into any product or service. We're looking to increase and benefit your financial well-being. And if it doesn't work, like Catherine said about, like, say, refinancing an auto loan, we're going to tell you. We're not going to, just sugarcoat and be like, oh yeah, do this, and do this. And it's not the best thing for you. We're going to sit, we're going to have a conversation with you. You take your car to a mechanic. The mechanic is your trusted advisor on what should happen with the car. This is our skill and our skill set with all the years of knowledge that everybody has at Island. So there's also things of benefit of home ownership. Do you want to own a home? What's going on in your life? Are you settling down? Are you just getting married? If you rent, you're going to build wealth for your landlord. Your monthly payment can always increase annually whenever your lease is up. You could also not live there anymore because you could have a year lease and then the landlord decides maybe they're selling the house or want somebody else to move in, and you could be trying to find someplace else. You're limited in what you can do there. You have to return that apartment or rented space back to the way that you received it. And you're going to have to come up with money. You're going to have to come up with a security deposit. When you move out, if you have done any damage to the apartment, you might have to pay for any repairs and things that might be needed. Where if you own a home, you can help build wealth. You can build your own wealth. You know what your monthly mortgage payment's going to be. You can customize the house the way you like it. You can put in new kitchen counters. You can put a pool in the backyard. You have the freedom to be able to do that because it is yours. You will most likely own a down payment and closing costs, but at Island, we have many numerous different programs and options from first-time home buyers and from self-employed borrowers that we can try to help and, again, sit with you to see what the best avenue would be for you to take to either buy a home. Maybe you need to rent a little longer so you can save a little more money. We can help you with your budget so that we can get you to the point where if you want to buy a home, you're able to buy a home. That's all the things that we will try to do at Island to help you. Buying a house will help you with generational wealth. So, like, if you bought a house in January of 2016 for $250,000, as you can see through the years, the value of the house has gone up. So then you could be looking at $293,000 for the house. Real estate is a good investment for most people. It's not for everybody, but it's also another vehicle for you to save and to increase the wealth of your family. So whether you're making an event, there's an event that's a significant change in your life, whether you're graduating, maybe you want to start your own small business. Maybe you want to get a new car. Maybe you want to, have the dream wedding. Maybe you want to look at buying a house. You're having a new member of the family. Maybe you have a house and you want to be able to expand that house and renovate it. Maybe you want to get that beach house, that you're dreaming of, and you love the area and you want to have an investment property. Or maybe you just want to go on vacation and relax. These are all things that Island Federal can help you, and that Catherine and I look forward to that we can help you try to achieve. So why, you might ask?
So there are some common financial mistakes that we see people making all the time. And some of them we may have even made ourselves at times. None of us are perfect, but that's why we're here, is to learn more and to learn how we can improve our financial life, right? So One of the things is not paying attention to spending, right? That daily, as it says here, $5 Starbucks coffee every day can add up to $150 per month. One of the things that John and I both believe in, when you start and you sit down and you're thinking about making a budget, is taking a monthly statement, taking last month's checking account statement and going through with highlighters, multicolored highlighters, and just highlight each different category on that statement. And it's sometimes a really big eye opener at what you're actually spending your money on. A lot of people don't realize, they think their money is going to one thing, but in actuality, they realize that maybe they're spending more on their lunch at work than they thought they were. And it's a good way to find places that you could cut back on to save. So, I mean, that goes into making a budget, right? So a lot of people don't have a budget. And the first thing that you need if you are going to improve your financial life is having a budget. You need to keep track of what you're spending and where you're spending it. There's a lot of apps out there that can help you do this, but sometimes just a good old spreadsheet it really works really well. And then people also borrow for living expenses. That debt piles up quickly and then you add interest onto it. People are using credit cards to buy groceries and not paying that off, or buy gas and not paying that off. And you just don't realize how much debt you've accumulated. It's a really good idea to sit down and add up all of those credit card balance and look at the total balance that you have out there, to really get a good idea of the financial situation that you're in and how healthy you are. You also, want to think about your relationship with money when it comes to budgeting. A lot of people don't realize or don't even think about it this way, but your relationship with money can be very emotional, and there's a lot of factors that goes into that. Your budget is a very personal thing. Many factors, like I mentioned, go into that relationship with money. Your culture, your life experiences, how your parents handled money, you have to take into account and really think about all of those things. And if you are taking the steps to get you where you really want to be. If you become delinquent on loans, you could have difficulty obtaining the things that you need to or want to in life, taking those next steps, getting a mortgage, buying a car, taking a vacation. You will be charged higher interest rates, as you become delinquent or default. If you miss one payment, that's a huge mark on your credit score, and it can really ding you. Applying for too many cards can also ding you. But you could have difficulty, just like I said, getting through life, getting a cell phone, even renting an apartment, having utilities in your name, all of those things that you need to live day to day.
So we do think it's very important to see, as Catherine said, about your spending. So we also know, and Catherine and I have been there ourselves, money is not an easy topic to speak about. Credit is not an easy topic to speak about. It's not necessarily the easiest thing for people to become honest with. You might not want to talk to your family. You may not want to talk to your friends. But what Catherine and I do, there's no shame when you come and talk to us. There's no question that's a bad question or not a good question. We want you to be honest with bills and stuff that you have so we can help you create a budget to track all the spending, even the small things, like Catherine said, the $5, Starbucks, to help you build an emergency fund, to help you review your expenses, eliminate unnecessary items, gym streaming. Sometimes, you go on your phone and you get an app and you don't realize, it's free for 7 days. And then, they start charging you. What I do with something like that is, if I go in and it's got a certain amount of free time, I go right in and then I cancel it. So you still have it for that 7 days, and then you can decide if you still want to have it. But if you don't, a lot of people just keep reoccurring this expense. Maybe you need to look at insurance if your insurance is coming up as another avenue. See if you can save money. Use online bill pay to track expenses. Spend wisely, spend to a budget and become savvy. Look to see when things are on sale. There are a lot of browser extensions that can help you with that. At Island, one of the great things that we offer is if you are using your debit card and you're following your budget, is you choose rewards so you can earn points. And so as you're using your debit card and you're spending wisely, you can earn cash back into your checking account. Manage your debt. As Catherine said, there's higher interest debt, credit cards to lower interest debt through balance transfers. So I think Catherine has a good example of this, of what to look for when you go to transfer a balance.
Yes, you want to make sure that you're not paying a transfer fee. So at Island, we don't have a transfer fee, but a lot of cards will charge you 3-4% for those transfers. So you might not be paying interest for some months, but you will pay a fee for that transfer, and they don't announce that. So you really have to read those disclosures to make sure. You also, I mentioned earlier too that some cards have an annual fee. You want to make sure that there's no annual fee also on that credit card. So those are some of the things that you want to look for when you're thinking about transferring balances. You also want to think about how it's going to affect your credit card, your credit, if you add a new credit card, to your portfolio, because that can also ding your credit. So you have to be careful and mindful when you're doing things like this.
So that's why we suggest at Island, when you bank with us, you download Credit Sense. You regularly monitor your credit. Schedule an appointment with us. There's no question that's not a good question for us to speak to you about or for you to ask. Catherine and I both get the most joy out of being able to help people. And that's what the credit union overall is about helping one another, members helping members. That's the slogan for credit unions. We want to make sure that you can get to the next step of your financial life. That's why we feel that we're different than other financial institutions on Long Island as well. So we do have some time for questions and answers if anybody has any.
Excellent, John, Catherine, thank you guys very much for going through that. At this time, folks, in that Q&A section down there, if you have a question you'd like to ask our panelists here, please go ahead and feel free. Again, please do not include social security numbers, credit card numbers, any personal information. John, keep going to the last slide, actually. I just want to show your information there. We'll give you John and Catherine's emails. If you want to set up a one-on-one conversation to talk about your individual situation, please reach out to them. Like I said, they have helped thousands of people. While you guys are going through, I made a couple quick notes. Home buying. A lot of speculation this year about rates potentially coming down on mortgages later this year. A lot of folks have been kind of holding off on that. I can't tell you guys how important it is to get your credit score in shape now. If you're considering buying a home tomorrow, a week, a month, or even a year from now, talk to our team about what steps you need to take today, because changing your credit score won't happen overnight. You can take those steps now and you'll start seeing that slow, gradual increase going up. Your credit score is so important in setting your mortgage rate. Not the only factor, but certainly a large factor. And that mortgage rate, a 1% difference in your mortgage rate will save you over $100,000 over the lifetime of your mortgage. Taking small steps today and getting that credit score in shape will save you over $100,000 over the course of that mortgage. And two, Catherine talked about auto loan refinancing. Guys, we've all been there. We're in the dealership, you got the car, you're going through the paperwork, and you don't realize what you're signing, what you did, what you have here. You find out you probably didn't get the best financing deal possible. Talk to our team. I can't tell you how many people walk in our office and are shocked when they see how much money we can save each month by coming to Island Federal to refinance that auto loan. Whether it's a new car, used car, or looking to buy out that lease, we're very rare. We offer the same low rate across the board and all of that. And you don't know what you don't know. It doesn't cost you anything. Come in, find out if we can save you money. Great. If not, at least you did your homework to know what you did for yourself as the best possible situation possible. So Like we said, we're not mortgage brokers. We're not getting commission and kickbacks here. We're about being your banking partner for life and doing what's best for you because we report to you, our members. A couple quick questions here. If I click and check my credit score, does it hurt my score? Bit of a complicated question. Want to know we get a lot. John, Catherine, you guys mind answering that?
Yeah, sure. If you're checking your credit score on our app, it is not going to affect your credit at all. The only time that it affects your credits is if you are applying for credit and somebody runs your credit. So you can check your credit report and you can check your score and it will not harm your credit at all. As a matter of fact, we recommend that you're checking your credit at least once a year. And you should sign up for credit monitoring. John mentioned that we have Credit Sense. There's no charge for that. It's absolutely free. It's nice to know, God forbid, somebody applies for a loan or something like that in your name. It helps you to eliminate any possible fraud as well, because you're going to get alerted right away and you can check that regularly.
And one of the most important things to do is, yes, credit score is important, but you want to know what's going on behind that credit score. So look at your credit report. Make sure that everything is being reported properly.
Yeah.
Make sure it's all yours. I mean, there have been times, with males in particular, junior, senior. With females, you have the same name but a different middle initial. Things do go on your credit report. So you might see what your score is X, but why is it X? Why should it be better? Look at what's actually being posted on your credit report. That's very important. Don't pay for your credit scores. You're going to get in a reoccurring thing. We offer the Credit Sense, which gives it to you every 24 hours. You can update it, but you're going to forget that. Oh yes, I paid for to get my credit score. You're going to forget about it, and then every month you're getting charged like $20, $30. That's money out of your budget. So it's very important, to realize, what's on your credit, what's going behind the score, like Catherine said, for fraud alerts and things of that nature.
So just as important as knowing your credit score is choosing who you go to get your credit score. Do not just Google credit score and give your social security number to the first website that pops up. Trust us, you don't want to go doing that. Go to your local credit union, come to Island Federal, do your credit score through online banking with Island Federal. That way you know it's been vetted, it's secure by Island Federal, and it's not some random website, www.creditscoreswithaz.com. Do not go around giving your social security number out to those websites. Come from a credible source.
I also just, while we're talking about this, sorry, Chris, I just wanted to mention the scoring models too. So the credit score that you get, if you do check your credit score, may not be the credit score that a financial institution gets when they pull your credit. There's different scoring models that look at different things and weigh things a little slightly differently. And there's different credit companies too. So it depends on who they're utilizing and what scoring model they're utilizing will depend on the score that you get. So there can be differences in scores as well.
One more question came in, guys. What are some of the pitfalls to look out for with credit card offers? 0% for X amount of months, 1% for X amount of months, things like that. What should we be looking for in that fine print to get the best card for us?
Well, I think overall, as Catherine alluded to previously on one of the other slides, if you do a balance transfer and it's 1, 3, or 5%, you're getting charged that in the beginning of that balance transfer. So they've got your money. They're increasing the balance of what you owe them. So no matter how long you take to pay it, if you go over that time frame, they've already got the 1, 3, 5%. That's a lot of money. Like at Island Federal, we don't charge a balance transfer fee. So what we do is we say, right now we have a special 1.95 fixed on balance transfers and purchases from the time the first thing hits your account. So you're not going to get charged extra. You're going to get charged the interest, but if you pay it off ahead of time, you're really not paying all that much interest towards it. Where in the other way, they're putting that block of that 5% right on top to the balance that you owe, and you're paying on that.
Yeah. So you want to look for that transfer fee, any annual fees. Some, like, I mentioned earlier, some cards have annual fees. So you want to check for that.
Yeah. Would you also recommend try to find out what your rate will be after that intro period, right? Because
Yes.
any balances
Oh,
you don't
yes.
have paid off on that, some of these credit card companies are downright predatory. They might offer a low rate for 6 months or so, and all of a sudden you're paying 27% on the balances that are unpaid. So try to find out. Obviously, the goal is to pay that off during the intro period, but hey, guys, life happens, right? Happens to all of us. Find out what your rate will be after that, just so you know what situation you're getting into. That's a really good question. Is Credit Karma a dependable site? I think we can only speak to Credit Sense, which we use at Island Federal, which we have vetted ourselves and know that it's safe. So I'll let these guys answer. I know that's the only one that we really speak to because they're a partner of ours that we vetted and trust.
Yeah. The only thing that I would say to that again is that you don't want to pay for your credit score. You know,
So here's my take on Credit Karma, and you can research this. I'm not a fan of Credit Karma. I'm not a fan of any credit monitoring company that will solicit you to take a card or you're pre-approved for a card. Now, there are stories, whether they're true or not true, so I'm not trying to defame any company, that will say, they'll say, oh, we'll close this card, because it's not helping you. And then 6 months later, oh, you should apply for this card. Well, there's a reason why the credit monitoring system is telling you to apply for it. There's some kickback that they're getting for it. I do not feel it's a credible site. Something like we use, I know we keep talking about it, but Credit Sense, that is just looking at your credit and we're not going to be emailing you and saying, oh, you should close this and you should do this. You have to look behind the scenes and do your own research on it.
Yeah. I mean, Credit Karma is a for-profit company. What are they doing
Yes.
with what's going on with your data, you think, when you give them all your data? Is it staying behind their doors or is it being sold to outside vendors? Again, Island Federal, nonprofit, member owned. I highly recommend you use our online banking software because it's been vetted. But it's a great question. What are some of the different credit scores from the three bureaus? Which one should I focus on for my mortgage if I'm looking to get pre-approved in the near future?
Mortgages are a different animal. They do what's called a tri-merge. A tri-merge is all three bureaus, Experian, Equifax, TransUnion. That's how they look at all the bureaus to see what your credit are and to get the average of the credit score for them to decide on the rate that you're going to be used for a mortgage. So it's not one in particular. So you can go to each credit bureau and sign up for free and have an account and look at different things. But it's also going to be looked at differently when you go for the mortgage because they're going to pull all three together.
So again, this is why we have John on our team because he knows all the ways to do this. He's helped thousands and thousands of people navigate the home buying process, home equities, credit card refinancing, and everything. And he helped me myself 10 years ago before I worked at Island Federal, long ago when I was a member. Helped me buy my first house, my first car. So I can tell you, it's great to have somebody to walk you through that process because you don't know what you don't know in a lot of ways. Can I sign up for Credit Sense for my online banking? Yeah, absolutely. Log into online banking. You'll see the button right there on the right side to enroll. Every 24 hours it refreshes. It helped me. Overnight, my credit score dropped 80 points. I hadn't done anything. I found out that a card was opened inadvertently to my social security number. Thankfully, the guys at Island Federal helped me get rid of that. It took about a month, which is actually not a long amount of time in the big picture. And my credit score bounced right back up. But I would have had no idea that happened if I wasn't monitoring my online banking, seeing that.
And it's also through the mobile banking app, which is
Yep.
great as well when you're on the go. When you download the Island mobile app, you'll be able to see it as well.
All right, I think that's about all the questions. This video is going to be posted on both our Facebook and our YouTube page. So if you want to go back and rewatch anything, please give us about a day. We'll get it uploaded there. Again, you've got John and Catherine's email information right there as well. You can always head to our website, use our book an appointment feature as well to talk to one of our branch managers.